Good evening. This is the Elliott Wave update for the S&P 500 for Tuesday, July 19th, 2022. Well, the S&P managed to, what I believe, broke the triangle pattern, but took us back to a pattern of a more normal ABC correction, likely turning into what I would term as a zigzag, or zigzag. And that I had laid out back in June after we made this low, and we started the correction as a fourth wave or a wave two, and whatever I was going through, I did at one point pull in some fibs, which I'll put on right now. So the triangle pattern was broken. So the channel line to the upside was broken, but the market ran to resistance at 39.50. It ran right to that daily 50. And that's an important level because it could just turn around right from there and go back down, but it could continue. The power today was consistent. And there was, in my opinion, a great deal of money coming into the market, a great deal of money being pushed into Apple, into everything. You just need to take a peek. You hit Apple up strongly under good volume, Amazon, Boeing, Chipotle, all of them fared extremely well today. Goldman Sachs, being pushed. Netflix earnings, so it got itself back above 200, now tax on an additional $17 after earnings. So basically we're up 27, 28, 29 on the day. And that's pretty good performance for Netflix. That's going to be adding not anything to the S&P, but still that would go to the plus side. So what is the concept? Oh, Tesla's going to blow the doors off, so we better start buying that up. And then they do. Everything gets to benefit from one tech vehicle showing a little bit of promise for the next quarter. So in any case, again, though, the markets, for whatever reason, we can get that same message from quantitative trading. So in other words, it's like if we're just trading, as a friend of mine put it, objectively versus subjectively. Subjectively, in my mind, would be taking a bullish or a bearish position, holding on to it, and basically fighting what the market is doing, but objectively leaves open that what the market is basically doing, according to like market profile, would be looking or trading to value. So the market will constantly move to where it can get those orders filled, where things can take place, where trade will happen. And if you're following market profile and you're just basically a trader, that's pretty much exactly what you want. If you're a market maker in any of these stocks, if you run a firm that you are looking at the markets or you're trading Apple, and you are a larger firm, you would be looking to trade Apple every single day in the size that you could get on days like today. The volume was there, same as yesterday. There was a lot of trade yesterday, a lot of trade today. These are firms that they walk away. So that type of trading, market profile, market moves to value. You can apply that to the futures market, which of course is then going to take into consideration every single tick and every single one of the component stocks. So it was a damn good day for the S&P, being up 111 in a corrective move in a what is still being considered a bear market or a downside move. So yes, but if we don't stay open, if we don't stay looking, being able to say, oh, okay, I've seen this picture before. I will acknowledge that the triangle pattern is now broken, in my opinion, and that we should be expecting some additional upside. And here's why, and here's where we can go. Okay. Having said all that, let's drop it down to the hourly. Let's fill in some, well, let me put some parameters around that for just a moment. I could do that on the 4-hour, can't I? Be a little bit easier for me. What I need to do is connect what I already have on here. And that is now we're going to take a look at where the market can play out. So ABC up, presented back in June as a potential path for, at that time, I believe I was saying that it could be a fourth wave or a second wave. And that second wave would have been, because I had labeled this back then as the potential for being wave one, minor wave one of intermediate wave C down. I've since changed, and I believe the market continues to adhere to that. But even under this particular count, where we have this as a minor third, this is still a fourth wave. Before I was counting it as a fourth wave, but as a triangle pattern, which would have limited the upside, not necessarily the time, not necessarily when it will finish, but more on the price, at least because we had a trend line, we had a channel line. It broke well above that channel line today and got up very close to the next resistance level, which is the previous high at 39.50. Okay, so, and on the daily chart, we know at 39.50, there sits the 50-period moving average, the daily. All right, where can we look? As a fourth wave, minimum, we're right there, 39.71. The market told you it needs value. Well, that's actually probably where it's going to find it. Fibonacci tends to do that. And a break above there just brings us up to 40.75. And it really is like 40.50 to 40.75. That could push us into next week. I don't know. But we have to also, at the same time, if you're going to market and use market profile, type trading, looking at a market, finding points of control, value area highs and value area lows, and then moving up what that shifts and how all of that works. And you cannot try to affix a market occurrence, what's going to trigger that, what's going to fuel that. You just have to have that thought and an area, and then let the market do the rest. But what you will then know is that should it occur, you can play, you can trade, and you can go with the market moving there. But if you stop and you go back and you think about, oh my God, but they're not, Apple's earnings were not that, they're not going to be that good. And the Fed's definitely going to raise next week. They're talking about a full point. If that comes into your conversation, you'll never take a trade. And trust me, this is experience, right? Oh, you can't break here because why would you be up there? Why are we pulling all this money in, et cetera? So the second that the brain and your thought process and your mindset shifts over to the who, what, where, when, or how, you're not taking a trade. So little trading advice, and this comes from the voice of experience. When you want to use market profile, and it is valid, it is used by a lot of technical algorithms and technical traders. To great success, I might add, because they're not in it for any more than that trade. You can use it to day trade, and that's the name of the game. You go in, you make your money, you're done, you say thank you. Now, where can we go? 39.71, I would say, is pretty much should be a given. In fact, we're likely going to reach that during the Globex session and maybe just continue to propel higher. 4,000 would be the next logical target. Then we have 4,075. And then after that, we have 41.76. Can it get there? Yes. Where can it break? Way up here. Do I want to see it up here? No, not necessarily. because it begins to just change the whole genre, the whole picture. And let me just add at this point that if it did, it is chartable, it is tradable, and I can move and work that if I need to put the intermediate C here, this is an alternate view. It's not like, oh, you make it up as you go along. No, it's there. And this is what the market is filling in the blank. But if the market continues to go, then I can trade it, and I should be able to trade it. And market profile will tell you to trade it. It will continue to indicate that we're searching for value. And what happens is sellers will only sell here if they think it's going to turn. If it doesn't, then value jumps because the sellers are like, I'm not giving any more right there. I'll take premium to a new level, and boom, that's where it goes. And if the buyers are still moving in, that's where it will go. Market profile, different style, not based on bullish or bearish, but based on value and supply and demand. Period. So those are our levels, and the market can get there, and the Elliott will fit. And it isn't the interpretation, it's following the market and being adaptive. This is a 4-hour chart. I take it up to the daily, it affects the same. So, but if we come down to that hourly chart, folks, then it is tradable. Why would you want to do anything different than try to participate in that? Is it overextended? Yes. So at some point, I'm not necessarily going to want to step in and buy it. So I may just become an observer. But there's no reason to sit out the money. And here's one better. And this is something I do and have done. I'll start to short it, but because I trade an account that can handle it, you carry the short. And now you're missing out on a lot. You get that small little move that allows you to take it off. You make a little bit of money, but meanwhile, look what you've missed. So going with versus going against, no matter the size of your account, just is going to stop to make sense, because we cannot go on the basis that we're going to continue to go up or we are going to go down and all that. When we do go down, you'll make the money. When it goes up, you should make the money. As a day trader, that's the name of the tune. All right, so tomorrow we cannot say that the market is going to just turn and go down. It may, and I'll tell you why. We have gone up to this 39.50 several times. So this is the third time. Third time's a charm? Sure, it can. And in this particular account, it should. If anything, we're in a wave C, and in that wave C, we've done one, maybe two. 1, 2, all grouped together right there instead of, it's not, yes, A, B, and then 1, 2. And this was part of 3. Part of 3. If we're looking 5 to get us up to here, I would look that 3 gets us above here. Then it pulls, then we rally again. So it's Tuesday, Wednesday. We have a couple more things coming out tomorrow. Tesla comes out tomorrow. It could just rearrange and pull in more money. No matter what, it's the money flow and the action. So that's the name of that tune. Now, downside, if it's a real shocker, then we're all going to walk away, but you have to be able to trade it and not worry that, oh, they're going to turn it and take it higher. Let them. But in the meantime, they're not. If they're going to drop it and they start breaking below moving averages, go with it. Stop with the turn, stop with the who, what, where, when, or how. The minute that enters, you're out of the market profile. You're out of what the market's really telling you it's doing. Or you can make a mistake. Okay, I'm going to leave it all right there because now I've given my trade talk time to the S&P. You guys deserve it. Have a great trading day tomorrow. The next update will be on Wednesday, July 20th.